Good morning, everyone. Steve Bitzler here. So I put a video out a few days ago, a week or two ago, um, about 4 pillars to help you become successful 2025 or any year for that matter. Talked about purpose and why, talked about health, investing, and being consistent when taking action. So I've already addressed the health piece. I'm going to address the why and purpose after I'm done, and there's a reason for that. Today I want to talk to you about investing. Investing is a broad term. Um, you can look at investing through stock market, real estate, a business that you're trying to start or buy, in yourself, your family. Investing to me is more or less trying to find a way to improve in an area or make an area better than it was before to get something out of it that will make you happy, feel good, and then also make you feel like you're on the right track. So if you kind of have an idea where you're going, write it down, create a visual, if you will. I do a vision board, kind of puts the pieces together so they make sense to me. Um, Investing is consistent. We always talk about investing as return on investment. Is what does that look like? What does that mean? How do you measure it? Doesn't have to be complicated. Analytically, yes, you have to see, hey, where are we going and how do we improved. But investing is reinvesting in yourself, in your business. It's a general term so that people could kind of like, hey, I'm an investor. What does that mean? Well, I'm a real estate investor, but I also invest in ourselves for our family so that we can achieve our goals. Invest in my daughter, her future. She's only 3.5, before in May. Give her a chance for success. Invest in my wife, the time, supporting her, helping her get where she wants to go. So it's not necessarily money driven. It could just be time. It could be your time to somebody. It could be a thought, a thoughtful gift. Whatever it is that you can do to make your life overall better, and then looking at your investments that you put money into, making sure that those things are consistent. So, having been in the financial business years ago, many years ago, there's a concept called dollar cost averaging. Basically, what that means is you pick a frequency of which you're going to invest, and you pick the amount and you invest on that frequency consistently without a miss or not hitting it. So what's the point of all that? Well, things go up, things go down. Well, that's the point of dollar cost averaging. You're going to buy more, buy less, buy more, buy less. Maybe you buy less for a little bit, but then you start buying more. The deal is you're accumulating and investing in the market, especially. You're accumulating shares of what you're buying. So the number of shares is where it's at. So the more you buy, acquire shares, when the price goes way up, that difference by the number of shares is where you're going to make your money. And the short term and long term day trading, all that stuff. The biggest part is whatever you're doing, be consistent on a frequency that you can accomplish and don't get off of that. If you're buying real estate, it's a matter of, so you look at real estate differently than you would buy a primary home, a home you're going to live in. A primary home you live in is a liability, really, because you're paying for it. No one's paying for it. You are paying for it. If you buy real estate as an investment, what kind of investment are you going to buy where? So the basic premise that I usually go by is, how much am I willing to put down to make sense of it? So some guys are like, oh my God, the interest rates are so high. I don't care about the interest rate. I just don't. What I care about, how much money do I need to put down to make sense of this deal? Obviously, with a low interest rate, it impacts the deal could impact the deal greatly. With high interest rate, it really depends on how much money you want to put down. Because cash flow is cash flow, right? I mean, it's going to make you money or it's going to lose you money. If you put more money down on an expensive property, obviously, either you're going to stay the same as you would if it hadn't gone up, or you're going to make a little bit of money. If you put that same amount of money on a cheaper property, obviously you make more money. But if you're on the fence and you found a property you want to buy, you have to make sense of that. means once you buy it, your buy-in date, the closing costs, and all that stuff that goes into it, that's what your cost basis is going to be. Now it's how do we make money off of this? Do we rent it? Do we an Airbnb? Do we do a VRBO? Fix and flip? Um, that's a decision you're going to have to figure out. Multifamily, okay, commercial office buildings. So there's lots of things. So before you buy any real estate, you have to know your market and you have to understand the market that you're in. And then also you have to look at the accommodations around, like schools, grocery stores, church if you go to church. Where are you at in the location of things around you that you can get to in a reasonable amount of time? So investing is I call it like a science. If you're a student like I am on investing, you learn different tricks of the trade to make it easier for you to invest. No, I have current investments in the stock market. I do not monitor it daily, weekly. Once in a while, I'd say once a month, maybe once every 2 weeks, I'll look at it to see where I'm at. Uh, and I'm in a holding pattern not because I don't want to invest more. I already have everything in place to invest. I have an online brokerage account. I have a mutual fund account with a separate company, and then our businesses provide cash flow, so we kind of go. So I'm actually reinvesting into a home right now to build more cash flow in the assisted living arena that we're in. And once I can match the cash flow with the current cash flow to get from the other facility that's doing really well, then I'm taking the next step and we're going to be buying multifamily. So I'm not in a holding pattern due to waiting on the market. I would buy right now. I'm waiting for our business to return an ROI, if you will, based on what we've put into it. So to kind of bring this to a close, investing can be a lot to a lot of people. You have to figure out what it is for you, figure out what direction you're going to go and study that direction so you know what you're doing. And by the way, investing isn't all high risk. It can be a calculated risk if you've done your homework and understand what exactly it is that you're buying. So because I study a lot in the market, I know the stocks I want to buy. I know the mutual funds I want to get into for steady down the road kind of thing. And then on the real estate side, I know where I'm going to buy real estate. I know that market. And so for me, it's a matter of, hey, how much I want to put down because I really want this property to make sense of it. So it's not a matter of I'm taking a risk. It's all a risk to some degree. It's a calculated risk because I know in the end I'm going to win. How do I build the win? How do I get the win? How much am I willing to put down to make that win an achievable deal? So if you're in that arena, that's what I would do. Otherwise, invest in yourself, acquire some skills that you don't have or you're missing for your business. It could be a leadership skill, it could be a tasking skill, QuickBooks. It could be learning how to manage. There's lots of books on how you manage. John Maxwell does a really good job on the books that he has out there. I've read many of them. I've read others' books out there that kind of give you perspectives on where they started, what they learned and how they got where they're at, and then they're sharing their overall experience with you and I and everybody else. So do some book reading on skill building, and then if you're working a job or you're working a business, maybe get more intimately involved in that business to show these skills and sharpen them. So you have time to sharpen skills, and the sharper you get, the better you're going to be, and the more successful you're going to be. So anyway, thanks for watching. Please comment, please subscribe, share. And if you disagree with me, that's fine. I'm just telling you based on my experience. That's how I've got where I'm at. Ballpark idea in the middle of it. We're doing this stuff. I've been learning this stuff for over 20 years. We started implementing all these things in 2015, 9 years ago. And we are almost at 5 million in assets. Now you say, well, that's not very much. Well, that's because one, I'm saving up for the down payment. I'm not using other people's money. We've built this slowly so that it won't fall apart, and my goal is to get to $1 billion. So once we get rolling with this other facility and we're good to go, we're going to get to $1 billion pretty quick because I know where I'm going, I know what I want to buy. It's just a matter of getting there. So anyway, thanks for watching again. Appreciate your time, and look forward to talking to you soon. And like I said, please subscribe, share, and let's make the world a better place. Thanks for watching.